Peace, power, and prosperity, family. How we doing out there? Grand rising to the multitude. This is only for the early birds at 6 a.m., 5 a.m., 4 a.m. Those that keep their ears to the street and get very little sleep. How we doing out there, family? You already know what time it is. The Bitcoin Block Bully coming to you once again with an early rising, early bird update. It is going on 5:44 a.m. Central Chicago time right now. We are streaming live via YouTube and Facebook and getting the podcast up and running now. So give me 1 second. Let me get this up and running. And while I have the time, as I mean, man, time has not been something that I've been having freely as of lately. So that's why you've been catching me going, these lives a little early, trying to get out what I can. But I did wanted to come through and share an article from the Synthetix exchange blog. It just gives a little insight on the Synthetix itself, hence the title, Introducing Synthetix Insights, Issue 1. So this is the first of many. Peace, power, and prosperity, Grand Rising Queen, how we doing? Peace, power, and prosperity, family. Y'all already know what time it is. It's the Bitcoin Block Bully coming to you once again with the early bird, early rising crypto update. What we're going to be covering this time around is an article from the Synthetix Insights blog page. It's a new series that they are beginning, and this is issue 1, and it is entitled Introducing Synthetix Insights. So they're going to be just diving into Synthetix, breaking down what's going on in the space for individuals that may be interested in reading up on the currency itself. Give me 1 second. Let me like this. Instant. We are streaming live right now, YouTube, Facebook, and New Money Matrix podcast. Go ahead and get everything blocked out so nobody can disturb while I'm recording. There we go. Get the vibe right. And now we can go ahead and actually get into this article. Grand Rising, everybody that is tuning in for this early rising show. Let me check real quick. Let me check. See how this order is going. 1 second. I am attempting a short on BTC from 7,400 on down right now. Caught it at that mark. Right now we at 73.82. Cool. All right. So going forward into the article, it goes on to state, dear Synthetix Spartans, which is what they like to call the individuals that are within their community, I guess, of the Synthetix holders. We're excited to launch Synthetix Insight, a newsletter focused on Synthetix, a decentralized synthetic asset issuance and trading protocol that is built on Ethereum. Once again, what is Synthetix? For those that are interested, those that are curious, those that want just a simple breakdown. It is a decentralized, meaning no central authority, synthetic, meaning not the actual, but a synthetic form of asset issuance, meaning they issue assets, and trading protocol, meaning that you're able to trade those assets on this protocol. And it's built on Ethereum, which is a blockchain network, which allows for the creation of smart contracts. Going right along, it goes on to state that given the rapid increased usage and following for Synthetix, we see a need for a data-driven approach to provide regular insights to one of the leading DeFi projects in the space. And they do say if you got any feedback, you can let them know in the Discord channel. So, getting into the first section, synthetic assets and derivatives, a $1 trillion market. In this inaugural piece of Synthetix Insights, we're going to start it by exploring why decentralized synthetic assets and derivatives is a major game changer and how Synthetix novel design is well positioned to capture this market. Synthetic assets refer to financial instruments that replicate the exposure to the underlying asset it is tracking. Once again, synthetic assets refer to financial instruments that replicate the exposure to the underlying asset it is tracking, meaning that you're not actually trading the actual asset that it may be named after. I.e., for instance, on the Synthetix exchange market, you're able to trade gold, you're able to trade silver, you're able to trade Great Britain pound, Japanese yen. Now, this is the thing. This is the thing. While you're trading that, you are only trading the exposure to those prices of those specific assets versus you actually trading the assets. So you're trading a replica to the exposure, not so much a replica of the assets. So you're not trading a cloned or replicated piece of gold or a replicated piece of silver. You understand what I mean? Or any of the fiat currencies. What it is a token that represents the price exposure or represents that token's price action and allowing you to trade and be open to the exposure of that specific currency. Same thing with Bitcoin. They got synthetic Bitcoin, synthetic Maker, synthetic BNB, synthetic Ripple, or XRP, excuse me. Now, the exposure can range from price, cash flow, and so on. It is usually done through a combination of different financial products, such as futures, options, and swaps. One might wonder why there's a need for synthetic assets, given that you can just trade the underlying asset. Well, they're going to get into a few reasons for this, which include, but are not limited to in any way, shape, or form, risk management. An asset owner can own synthetic assets that give you short exposure to the underlying asset. This allows one to reduce risk by hedging, and that might not be possible to do so in the spot market, meaning that some of the assets that they offer you, you may not be able to short trading it on spot or the actual asset, meaning you can only long the position. On the Synthetix exchange, they have inverse pairs, meaning that you can short as well as long different positions, meaning that you can hedge against the market if it is turning around and going against your uptrend, meaning that it's in the downtrend. They also have leverage exposure. One can gain leverage exposure to the underlying asset through synthetic assets, such as owning a 2x leverage long ETF of the S&P 500 index, right? And I spoke yesterday on the fact that they're about to open up the synthetic futures and allow leverage trading. You also have the ease of access, which I believe should be number one. Meaning that anybody, well, let me give what they're stating, and then I'll give my own added commentary. But they go on to state that it's sometimes easier to short a futures or buy a put option of a financial asset than outright shorting it, as it requires borrowing the asset first, which might be hard to come by. And I believe what they're speaking on here is the fact that you just have tokens that represent these specific positions versus you having to manually put yourself into that position. Just as an example, certain exchange markets that you have. Let's look at KuCoin, DragonX, that allow leverage trading, meaning that you can long and short positions. When you short positions on some of these exchange markets, it's not as easy as clicking the short button or clicking the sell button. What you actually have to do is borrow the asset, sell that asset at a high price before you're looking for the downturn to come, and then be able to buy that asset back with the base currency or the paired currency that you sold it for at a lower price, and then go back and repay your loan, meaning that you have to pay back that what you bought and then keep the extra. But all that is done manually. It's not an automatic. For instance, if you're trading Forex, you just hit sell. You pick the price that you want to sell, price you want to exit at. Over here, instead of having either or, you have assets or tokens that represent those specific positions. So if I want to short Bitcoin, I don't have to press sell or anything. I simply buy a token that represents a short position in Bitcoin. So if Bitcoin goes down, my value in this token goes up. Goes on to state, in fact, synthetic assets or derivatives volume usually dominate its underlying spot market in traditional finance markets. For example, trading volume of crude oil and gold derivatives are few orders of magnitude higher than the spot physical market, as most investors are or traders simply want a price exposure to oil and gold without the intention of taking physical delivery or having any type of ownership of said asset. According to the most recent data from the Bank for International Settlements, the BIS, gross market value of all derivatives contracts is approximately 12.7 trillion United States dollars, and the daily turnover volume are more than 10 trillion United States dollars. This is orders of magnitude higher than trading volume of spot financial assets such as stock, bonds, FX, and commodities combined. We have started to see this playing out in crypto as well. 2018 is the first year where crypto derivatives traded more volume than the underlying spot market. BitMEX, which is the leading the charge, having traded more than 1 trillion United States dollars for 2018. This is despite the bear market in crypto assets where spot volume has declined compared to 2017. And we'll speak on the fact that spot value has declined because when you're actually physically trading these, you have to take ownership of the actual asset, meaning you actually got to hold and buy Bitcoin. You actually got to hold and buy Ethereum versus where you're trading futures or options markets. You're able to just sell, meaning short that position or long that position utilizing the contracts. For anyone that uses Bybit, you trade in perpetual futures contracts. You know what I mean? Perpetual meaning that the contracts don't expire, but they're contracts nonetheless that just allow you to trade the price of the underlying asset and not actually have to take physical ownership of it. Now, the thing about Bybit, though, may I add, is that your contracts are actually settled in the currency that you trade. So no matter what the market is doing, you're always going to be in that currency. So for anyone that was to hodl, that did have any type of experience in trading, it would be my understanding or my opinion if I was in their shoes and I had the amount of knowledge that they had, as well as the underlying asset, I would look for a market where I'm able to hold my assets still. But if the price does start to turn around and go into an overbearing or, a drawn out long downtrend, I'm able to actually short and add my position, meaning that as the price goes down of any one of those assets that you're shorting, the amount of the asset that you have is actually gaining. Interesting. Let me see where I leave off at. Okay, here we go. It goes on to state, however, it is generally very difficult to bootstrap liquidity for derivatives since you always need one party on the other side of the trade due to its zero-sum game nature. BitMEX was launched in late 2014 and only took off in 2018 after attracting many professional market makers to provide liquidity on their platform throughout the years. They also have an internal market making team to provide liquidity for various derivatives contracts on the platform. When it comes to bootstrapping liquidity on a decentralized Synthetix asset trading platform, I know it sounds complicated, so for anybody that is using it, pat yourself on the back. A similar approach is much more difficult as most professional market makers need to interact with smart contracts directly and deal with latency of the blockchain. Additionally, the volume of new decentralized exchanges are usually too little at the beginning for professional market makers to justify investing resources. Synthetix uses approval to tackle this lack of liquidity issue that is prevalent among many decentralized exchanges. Instead of spending significant resources to support an in-house market-making team, SNX mentors that issue synthetic assets by staking their SNX, you and I, act as a pooled liquidity providers for every trade that happens on the Synthetix exchange. I'll say that again. I'm going to say that again and reiterate that. For individuals that are actually holding SNX, right, holding it in their wallet and are staking it, you are the individuals that are allowing the liquidity or putting the liquidity into the market for individuals to trade with. Also allowing the synthetic assets to be minted and secured. A synthetic version of Ethereum that assets can be built off of. You could say that though SNX is a Ethereum-based token. It runs on the Ethereum network. It actually runs on the Ethereum network. Brother Juan, what's going on? Peace, power, and prosperity. Grand rising, Miss Henderson, Miss Hill, Miss Cheryl. How you doing? Brother Ferris, how we doing? Peace. Thank everybody that's tuning in right now. But going right along with the article, it goes on to state that. Oh, once again, I want to reiterate that instead of spending significant resources to support an in-house market making team, SNX mentors, those that hold SNX and place them on Mentor and Momentum, that issue synthetic assets by staking their SNX, act as a pool liquidity provider to every trade that happens on the Synthetix. This pool liquidity model enables Synthetix to leverage on the strength of its community to provide unparalleled liquidity right from the start. Hold on, give me 1 second. Somebody is asking me to tag them. How do I? Hold on, let me see. How do I do this? Ah, there we go. There we go. Okay, let me get there we go. There we go. Just want to get a couple of people in here that I know is most likely to be interested in this information. There we go. There we go. Let's see. Yep, and that should be decent. There we go. So, it goes on to state that this pool liquidity model enables Synthetix to leverage on the strength of its community to provide unparalleled liquidity right from the start. SNX mentors collectively are rewarded all the transaction fees generated from trading activity on Synthetix Exchange for taking on the risk of being the liquidity provider. Additionally, using SNX as collateral to generate synthetic assets allows the supply of synthetic assets to scale with the demand. Since the value of SNX are intrinsically dictated by the fees generated from the synthetic exchange. Once again, using SNX as collateral to generate synthetic assets allows the supply of synthetic assets to scale with the demand. Since the value of SNX are intrinsically dictated by the fees generated from synthetics. So, I mean, we've seen synthetics, especially since we entered the market, go from around 24 cents up to $1.54, maybe. If I'm not mistaken, may have been where we topped out at. So it just shows you the growth of the platform itself. It goes on to state that more demand for synthetic asset trading will lead to higher value of SNX token, thus leading to more synthetic assets able to be issued. This novel design aligns the incentives between synthetic asset issuer and users. Once again, let me reiterate that for the people. More demand for synthetic asset trading will lead to higher value of SNX token, thus leading to more synthetic assets being able to issue. Using internal assets such as Ether to generate synthetic assets will not have the benefits above. For example, DAI is by creation of self-leveraged demand. DAI issuers do not have any direct incentive for issuing DAI except for their own demand to leverage on their ETH holdings or to generate some cash without having to give up their upside in ETH. Instead, they're paying a higher than market interest rate for this over collateralized borrowing. So they're talking in reference to the MakerDAO DAI platform, and not in a negative form, just stating their the way of looking at it. It goes on to state the incentives for DAI issuers to issue more DAI are not very strong, even if DAI is trading at a premium, if DAI issuers don't want to take on more leverage. Overall, Synthetix represents a game changer in synthetics assets issuance and trading space. We see a huge potential for its growth for it to go further as it gets more system-wide integration. People slowly realize the potential of censorship resistance and permissionless ownership of various synthetic assets. So the SNX liquidity myth. It probably goes without saying that liquidity is extremely an investment. The simplest and most straightforward rationale is that illiquidity hides true value, and the current market price might not be reflective of what you can actually buy and sell at. A few trades match with tiny volume as an outlier, with lots of trades matching with high volume makers for a more reliable space. One of the most criticisms of SNX as an investment is that it is extremely illiquid. However, we're going to show you why this is not true. Firstly, SNX volume is constantly underreported due to the simple fact that almost all websites and services that track volume are only looking at centralized exchanges. However, the majority of the volume of SNX is actually taking place on Uniswap and Kyber, and this data is usually not reflected. CoinGecko is one of the few tracking sites that is able to capture this data. And just comparing the previous 24 hours, CoinMarketCap is underreporting volume by 50%. Next, take into account that SNX is a staking token that has extremely high staking participation rate due to very attractive rewards from its monetary inflation schedule. From the latest research published by Binance Research on Staking, Synthetix has the highest staking ratio across the largest 15 crypto networks by market capitalization. The locked SNX ratio right now is 82.09%. That's a percentage of SNX tokens that are staked, meaning that this currency, this specific coin, and the reason that you see it, let's in fact take a second now. Let's take a look at the charts for those that are able to see. Let's see. Let's take a quick look at the charts. If there we go. Okay, let's erase that. Didn't know this was running choppy as it is. Let's see, maybe I need to close. Let me close some of these other let me close some of these other websites I have open so that we don't get that that lag that we're getting right now, which I did not know was going on. Hopefully that it's not actually recording like that. So we're waiting patiently. Okay, so hopefully I do apologize for the viewers and the listeners. They used to have a freeze. They seem to be frozen here. Let me see if I can get this unfrozen, as I would hate to have to stop halfway through this article. Start this over. We already got what about how much time do we got on New Money Matrix? Got about 20 minutes in. So yeah, I would hate to have to start this over. Let me try my best to get everything over here unfroze real quick. Give me 1 second. Give me 1 second. Now, what's interesting is that on the Android version of the platform that I'm recording the podcast on, you're actually okay. Here we go. Okay, there we go. There we go. Unfrozen. Cool. All right. Let's real quick. Let's take a look at SNX as it's traded. There we go. Let's make sure everything is still recording though. As things may, let's make sure we're still recording. Okay, still live on Facebook. And we are still live on YouTube. Cool. Cool. All right, let's proceed. No, this isn't what I wanted to look at. Hold on. Here we go. We want to look at the charts. And basically what I wanted to look at is the simple fact that no matter what the rest of the market is doing today, has been moving. Let's take a look real quick. Synthetix has been moving against the market and just trading up to 80% of its tokens are locked in stake. They're not being traded on the open market. So you're not seeing that volatility that you're seeing on highly traded currency. You know? With the staking reward standing at 75% APR for the first year. 75% annual percentage rate. Crazy, I know. Few SNX holders are willing to engage in market-making activities for trading the SNX holdings around when the opportunity cost of not participating in staking is high. The effect is that less than 2% of supply can be traced to exchange wallets as user deposits, which are available for trading. Slightly over 0.5% of supply is in Uniswap, but due to the constant product pricing module, it is impossible to drain out the SNX there without ending up paying obscene prices. It's also misleading to look at volume alone to access liquidity of a crypto asset. Depth of the buy and sell order book is much more important metric to look at, as that represents the actual cost of entering and exiting the asset. It is also harder to fake compared to trading volume, which is frequently gamed by many exchanges listed on CoinMarketCap. SNX currently has the fifth largest Uniswap pool, standing at 1.5 million of liquidity. A 10,000 SNX sell order on Uniswap will only incur 3.4% slippage, which is slightly higher than crypto assets at similar market cap, but by no means completely illiquid. Uniswap also has become the primary source of liquidity for SNX. SNX is one of the very few top 100 crypto assets that have more liquidity on decentralized exchanges than centralized exchanges, besides Maker and DAI. This makes the SNX liquidity much more robust and less susceptible to the whim of any centralized exchange. SNX also experienced a major stress test on its liquidity on the 26th of October, where one of the top 50 token holders sold his entire 324,000 SNX holdings in less than 15 hours on Uniswap. While this major selling did cause the price to correct about 30%, let's see, October 26th, huh? Interesting. Let me see, what was that? 25th? Huh. Well, this is the 25th right here. So this is where we dumped from 87 cents. Let me see, what do we lose here? About 87 cents, about 16. We didn't even lose that much. But from 87 cents down to about 72 cents is what they must be talking about. The combination of the cross exchange with this major selling, while this major selling did cause the price to correct around 30% afterwards, immediately, combination of cross exchange arbitrage and organic buying demand at that level led SNX to close the day only down 15% and back to similar price level before this major selling occurred in 1 week. To put this into context, during the 17th May flash crash of Bitcoin price, it only took a sell order of 4,300 BTC to crash the Bitcoin price on Bitstamp by more than 20%. And the 50th top holder of Bitcoin holds 14,500 BTC. Given the high opportunity of not staking SNX, most big ticket trade size occurs through over the counter, as large holders are actively staking and will only unstake when there is a confirmed buyer deal in place. According to one of the leading OTC brokers, SNX has much better OTC liquidity compared to crypto assets with similar market cap. By buying or selling SNX through OTC, buyers are selling to minimize opportunity costs lost by breaking up orders. The recent availability of OTC tools, Diversified Trustless OTC and AirSwap Trader, also make the entire OTC process much more efficient and trustless. There is an OTC channel in SNX Discord that helps mid-sized SNX holders to find a match and deal trustlessly, together with several OTC brokers actively helping to facilitate various deal sizes with both trustless and trusted escrow methods. Below is some of the on-chain OTC trades we managed to identify. They actually got some huge ones. Right here, you got 55,243 USD or dollars traded for 123,750 SNX tokens. Below that, you got 406.9186 Ethereum traded for 110 SNX. So let's do the math. They got 110 SNX. Right here is 123 SNX. $5,000. So that can give you sort of a ballpark figure of what 110 SNX. Here you have 500 ETH for 71,000 SNX. Another 500 ETH for 64,000 SNX. Got that on a dip. And then from AirSwap Trader, as these were from Diversified Trustless OTC, AirSwap Trader, you got $300,000 spent for 400,000 SNX tokens. Shit. You got another 100,000 SNX tokens here bought for 395 ETH. Another 100,000 for 395 ETH. Another 100,000 for 395 ETH. Each having a different address, meaning they are different orders. Somebody just snatching up 100,000 SNX. Then another 100,000 bought for 73,000 USDC, and another 100,000 SNX bought for 111,720 USD. Therefore, SNX is actually more liquid than it appears on the surface, with 500,000 plus USD daily volume. This is the network data insights, the 16th of November to the 30th of November. We're not going to run through all of it, but you can look at what they're showing. The active Synthetix exchange address The 15 days average is 649. 15 days change is up 287 addresses. Total value locked is $145,844,833, up 15.91% in the last 15 days. Then you got the locked SNX percentage of total value being 75.80%, down 4.31% within the last 24. I might as well read through all this. And then you got the token cent supply, which is at $19,445,978, up 51.91% within the last 15 days. Next, we get into the economics. The exchange fees generated in the last 15 days are $7,782, which is actually down within the last 15 days, 61%. So the exchange fees generated are usually higher. The exchange fee yield percentage of the APR is 0.71%, which is down 7.55% in the last 15 days. The synthetic ETH, the ETH Uniswap pool liquidity is at $7,880,056, up 13.15% within the last 15. The synthetic United States dollars versus ETH Uniswap pool liquidity is only at $365,056, and it's up 0.78%. Total cents to DAI ratio is 19.15%, which is up 5.30%. Next, we get into SNX. At the time, SNX was trading at a price of $1.25, which is up 56% within the last 15 days. Yeah. The SNX volume, centralized exchange and decentralized exchange, was 1,028,000, up 414% within the last 15 days. The liquid market cap was 110,624,804, up 56.90% within the last 15 days. Then you have the fully diluted market cap, which is 192,000. Excuse me, once again, $192,343,896, up 60.21%. Now you have the FNX supply on exchanges, which is 2,000. I don't know why I keep saying 3,000. Tired early. $3,147,824. No, excuse me. The SNX supply on exchanges is 3,147,824 SNX tokens, which is down 232,631 SNX tokens last year. SNX rallied significantly over the last 2 weeks, recording compared to the average price of SNX for the first half of 2019. The volume for SNX increased even more, standing at average volume of roughly 1 million a day compared to 200,000 a day previously. So definitely making their rounds, getting their money up. Grand Rising, how we doing, Miss Naj, Brother Boogie, peace, power, and prosperity. How's everybody doing out there? Good thing I can still be heard. Brother Quinn, Brother Perry, Brother John, how we doing? Grand Rising, everybody tuning in right now. We have been live now, what? Probably about 30 minutes already? About 33, yeah, we're about 33 minutes in. We go down to state. Where did I leave off at? Since supply expanded significantly as well as people are able to mint more given high value of the SNX holdings. However, interestingly, the SNX supply on exchanges have actually come down despite the pricing. Shows that new SNX buyers are withholding or withdrawing it from their exchange to stake instead of just for pure speculation reasons. The Synthetix exchange metrics presents a mixed number. The active traders have increased significantly to 649 unique addresses trading on Synthetix exchange over the last 15 days. However, volume has come down due to the increased trading fees of 0.5%. We expect it to climb back up given the fees have been lowered down to 0.3% lately. The synthetic ETH and ETH Uniswap pool liquidity continues to increase despite the drop in ETH price lately. It reached as high as 9 million right now and shows no sign of stopping as the yield continues to increase with the climb of SNX price. One metric we will be watching slowly is the total cents to DAI ratio, as it represents an entire different system design to bootstrap a synthetic asset issuance system. Now we're going to get into I think that is the actual end of the article. I think these are just recent Discord discussions. Yeah, this is just the ending of subscribing past issues. So that was it. Very, very, very well articulated, written article. I hope that the individual listener, viewer, the watcher got something from that. Before we do leave out, are there any questions or comments before I get out of here? Any questions or comments from anybody? I will be going live here in a minute on Periscope. via Twitter. You can go to my Twitter page and watch. Oh, yeah. And I'm going to be looking at the top 10 coins on Periscope, looking at the stats and probably reading a little bit of news. Trying to get my Periscope game up, my Periscope followers up. Something that I meant to do in 2018 and never got around to. So I guess I'm going to bring in 2020 with it, but I got to become familiar with it right now in 2019. So, Miss Lee, how we doing? Queen, peace, power, and prosperity. Empress, how have you been? Beautiful Queen, how we doing? I was seeing you working and moving too. Best believe you're not invisible. Best believe you are not invisible. You see, I'm still going hard on the cryptocurrency. Nothing's changed. Let me see. With that being said, if there's no questions, no comments from the viewers, we will be ending this. Let me go ahead and actually end the podcast. So for those that listened in on the New Money Matrix podcast, Power and Prosperity, Bitcoin Block Bully is out of here. There we go. Got that done. So let me see. Any questions? Let's see. Shelton Pooler, what's going on? Just closing arguments right now. Any questions or comments from anybody tuning in right now? If not, I'm gonna go ahead and end both of these broadcasts so I can get on with the Periscope episode. Which I want to try to do it around 6:30. Got about 10 minutes to do it. What's a good crypto? I don't know how to answer that question. There's over 2,000 different cryptocurrencies. And that's that's too broad of an even question. What is a good crypto? You got Bitcoin, Ethereum, Litecoin, SMX, Bitcoin Cash, XRP, Ripple, DGX, KNC, ZRS. There's a bunch of cryptos. Just saying, what is a good crypto? That's too broad of an even question to even try to answer. I apologize for that, but yeah, I can't. There's no way to answer that. Look for a crypto that has good utility, I guess. But even then, with good utility, sometimes it doesn't follow in the price action. So it all depends on what you mean. Are you looking for a crypto to hold? Or are you looking for a crypto to trade? Because holding and trading are two totally different games. You got individuals in the group saying SNX. I can't give financial advice anyways, but you got people in the groups saying SNX is a good crypto. Let me see. Make sure we don't have any questions over here from Facebook, and we don't. So with that being said, I'm gonna go ahead and get out of here. To the next video, until the next podcast. This is the Bitcoin Block Bully. Peace, power, and prosperity, family. I am out of here.